Think we should be live on Facebook. Hi everybody, welcome to today's video. I'm Sami, Director of Education at T3 Live. Gonna do what we always do, which is go over some swing ideas for next week. Before we start, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss is for educational purposes only. We always go over this before we start. If you'd like to download a copy of my free ebook, link for that is in the description. Again, link for it is in the description. If you want to help support this channel, please be sure to hit the like button. That helps us out a lot. But with that said, let's go ahead and get started. Hope you're doing well. Hope you're having a good weekend so far. So we're going to talk about the market, and then we'll go over some swing ideas. The swing watch list here, bullish and bearish, were copied and pasted in the description of the video. So feel free to just go to the description, copy them, paste them into your watch list, and let's go over them together. Okay, first, the market. I gotta tell you, the market has felt very toppy the last few days, and that's not news to you or anyone, but the problem is it never really gave us a good setup to, you know, to try and predict the top. And as I've always said, it's foolish to try and predict the top when the market is just grinding up. Grinding up means, you know, going up in a steady, controlled fashion. When the market starts to speed up and accelerate, like we saw in August, at the end of August, beginning of September there, okay, you can try and predict the top easily, okay? SPY was even better at the time. But when the market is just hugging the 20-period moving average, and here's the SPY at the end of at the end of August, pretty climactic. But when the market is just hugging the moving average, it's really, really hard to try and pick the top, because most of the time, almost every time, it's temporary. You get the drop and then goes back up. The drop goes back up. And so that's what we got so far today. I mean, this last week, we got a drop, and now we're waiting for the bounce back up. The bounce back up will tell us whether this was a temporary top or a longer term top. Got it? So that's the difference. We just need to see a rally, and once we get the rally, we'll have the pivot. The break of the pivot will signal a longer term bearish stop. But so you see the pivot, once you get the pivot, if we break under it, then that would become really bearish. But otherwise, we're still okay. Of course, as I said at the start of the video, this felt pretty toppy to me. In fact, I issued a note, I added a note to Friday's newsletter. Let me see. Here it is. Here's what I said in Friday's newsletter, okay? I said, oh yeah, NVAX, by the way, congratulations if you're a part of the newsletter. NVAX gapped 60-some%. So it gapped beyond targets 1 and 2. At the time I wrote the newsletter was only gapping 30%. It ended up gapping over 60%. We had it as a swing play. So we got it on Thursday. Friday, it already was gapping 60%. But that's not why I wanted to show you the note. Here's what the note really said. This has been a very interesting week in the market. Professional investors are quite spooked by all these Reddit stocks and the absurd rallies they're igniting all over the place. It is very reminiscent of the tech bubble when worthless internet companies were gapping up crazy amounts every day, just before the market crashed, leading to an 82% drop in the Nasdaq. That is true. From top to bottom, it was an 82-83% drop over a year and a half or so. Also, the Reddit phenomenon might lead to new regulations, which obviously Wall Street does not like. It'll be interesting to see how it all plays out. All we can do is hope for the best and take advantage of the incredible volatility that we currently have. So that is still true. The market feels very toppy. We've seen all these 100% plus moves, which are, you know, they typically happen at tops, near tops. We do have kind of big red bars, but we still, I think it would only be safe to go all out bearish, to become all out bearish after we see what the bulls have in store, after we get that pivot. And if that pivot fails, then yes sir, or ma'am, as the case may be, we can be all out bearish. Okay, for now it's not quite safe. The SPY, I guess, is weaker than the Qs, broke below the 20. Notice the SPY broke the trend line too. And also, if you follow cryptocurrency, Bitcoin is not acting right. Right? Bitcoin is a little bearish too. IWM is probably the strongest, has been the strongest. Let's take a look at the weekly. Pretty extended, can pull back. And then the diamonds are also just like the SPY, showing relative weakness to the NASDAQ, to the Qs, and the IWM, which is the Russell 2000. Okay, so hopefully I've kind of talked, gave you a good amount of information about the market. There's nothing really that needs to be figured out other than what we just discussed. Let's go over the swing ideas, shall we? If you're a part of my newsletter, I already completed the newsletter. Feel free to log on to your T3 Live account and you'll see which plays I picked for us for tomorrow. ACTC, that's a SPAC. I'm sure that's a SPAC. On a pullback to the rising 20 is very, very bullish. Looks higher over 24.50 with a stop under 22.50. Okay? ACTC. Adams looks pretty phenomenal. This is what I've been focusing on this last, I don't know how long, for a few months now. This pattern, the transition A on the monthly chart, and I don't know what scaling I'm on. Check it out. I just want to show you when the 20 comes from underneath and it starts to break out. That's been a phenomenal pattern if you've been playing it. It's been amazing. So Adams or ADMS, like it higher over 594, stop under 515. Okay, and it's more of a longer term play because it's a breakout on the monthly chart. It's a transition A breakout. AFG, a lot of relative strength, had a phenomenal gap on Thursday over a wide range red bar. Took out all of the 90% of the resistance, I would say. Put in, unfortunately, not a very narrow range bar, but put in a green bar despite the sell-off, that 2.5% in the market sell-off. And so now has a 1, 2, 3 pattern to play long. Okay, so I like it higher. A lot of relative strength to the market. ARLO is a breakout on the daily chart. I don't know if that's a transition A. Yes, it is, but it's already triggered on the monthly chart. So over the base, stop under it. It's also a 1, 2, 3 pattern on the monthly time frame. BKEP was a play that I took in my IRA account at the start of when it broke out. At the start of the year, I was going to say, but it really was at the end of last year. And now has another base breakout on the daily over here, stop below it. Very, very thin. Thin means low volume, but I like it higher as a longer term play. BKEP. It's an oil stock. CETX has a daily pullback, low priced, which is perfect because that's what's been doing the best. Monthly transition A, like it a lot on the CETX. It just needs to take out this bar's high, which is $1.85 with a stop under $1.66. Okay, on the CETX. COCP is also a pullback to the rising 20 on the daily. It triggered already on Friday, but it needs to re-trigger because the trigger bar turned into a big topping tail bar. That's a little bearish. So we want to make sure that it takes out the topping tail bar's high, and while at it, might as well wait for this bar's high to get taken out too. So it's over $1.90 long, stop under $1.60, and target at least 240. If it's a monthly transition A, which it is, you can look for a larger target up here somewhere. I played the ACRS. I just want to show you this real quick. So I played the ACRS right here when it broke out. This buy setup, I played it when it broke out, and then it got to target. So I took it. Okay, all right, check it out. Where's it at now? $20. Why? Because of the monthly. Was also a monthly transition A. Now it went nuts on us this day. It went up, I think 50% or something crazy like this. Not 50, but a huge amount. Okay. Maybe almost right. $2 on a $4 stock. That's over two. That's almost for 50% in one day. On top of that big green bar. So I had to take it. But the truth is, it kept going way up. Why? Because the monthly took over. So a lot of my swing plays have also good long-term monthly charts. CYDY is an OTC stock, but it's beautiful. I traded this stock multiple times last year in 2020, but I'm not a fan of OTC stocks. I don't trade OTC stocks, but this thing moved a few times last year. Notice the big pop. Notice the narrow range bar. Notice the curling 20 MA on the daily chart, and notice the 1, 2, 3, which already triggered on Friday. I traded it on Friday also. The weekly looks good, so I like it also long, the CYDY, but unfortunately it triggered already. EQT is an oil stock, has a monthly transition A breakout, so I like it a lot. This reminds me of the AR, which I passed on, but as you can see, here's when I posted this as an idea only. So in the newsletter, there's a section for just ideas and a section for the official plays that I'm taking personally. So I posted this just as an idea over here. Stop right here, and it really worked. Look at that. And now, because of the monthly chart, okay. And now we have a similar idea on the EQT. It's a daily buy setup. So the entry for this would be over 1723. Stop under 1530. That's a big stop. 1535. That's a $2 stop, but it's a long-term play because of the monthly chart. So I like it a lot. KC showed a lot of relative strength recently, broke out to new highs, and now has a pullback. Didn't get to the 20, but that's okay. Over $52, $51.95. Let's say $52, the whole number. Stop under 48.24. Target minimum the prior pivot high, which is 58.50. So like it a lot. Last but not least is the Qrtx. Had what I would consider a bearish top. See that rounding top? The more candles at the top at the prior pivot high, the more resistance there is. The bigger the candles, the more resistance. The higher the volume they form on, the more resistance. And the faster the pullback, the more resistance. Okay? So when it comes to technical analysis, a lot of people oversimplify it. They think, oh, it's red and green. But the truth is, there's more to it than just red and green bars. These red and green candles mean something. So again, the more the bars, the bigger the volume they form on, the faster the sell-off that happens, because the sharper the drop or the faster the sell-off, the less time people have to get out of it. So meaning they get trapped. So on the way back up, they sell it and it fails. But at any rate, it's not a bad idea over this bar's high. It's not one of the ones that I'm going to be playing, not one of the 4 longs that I'm going to be playing, but it's not bad. I also like it, if I remember correctly, on the weekly. It broke out nicely. So this is a pullback after an unbelievable breakout on the weekly chart. All right, on to the bearish items here. CLPT. So what I have here is a lot of these climactic type plays, the ones that are up so much that and have wide range bars. Look at the KIRK, for example. That's even worse. It went up from 50 cents, right, to $30. So we talk about Tesla, we talk about GameStop, how much they rallied, and they've rallied a lot. But this thing went from 56 cents, okay, to $30. That's 6,000%. Okay, it blows anything out of the water, including GameStop, Tesla, all of that stuff. So is it done? Perhaps. We got the wide range bar. It looks pretty done to me. It looks like the rally's over. Look at that nice rounding top on the hourly chart. Gorgeous. Short under, stop above. So I really like it. But the unfortunate part about it is the size of the stop. It's a big stop. It triggered already on Friday, by the way. But it's still not too late. So I like the KIRK a lot. And then the CLPT is similar. Notice the rounding top on the hourly chart. So under the base, stop above, and target 1 at least would be the 20 on the daily. You can target, you can target the 20 on the weekly for target 2. In order for the stock to drop to the 20 MA on the weekly, you gotta have some cooperation from the market. The market has to also have already topped out. But stocks don't usually drop so much without any kind of bearishness from the market. So if the market turns out to have topped out, then yes, all of these plays will not just drop to the 20 on the daily. they will come all the way back down to the 20 on the weekly, if not the monthly. So I have a lot of these. Plug also. Plug doesn't look so good on the daily, but it looks pretty good, pretty damn good on the weekly chart. Look at that big top and tail bar. So it looks really, really good on the monthly. So under the base right here, stop above it, because if you put your stop above the all-time high, it would be too big of a stop. Stitch fix does not look very good on the daily, but look at the weekly, that big top and tail bar. That's really bearish also. Big stop. SPWR, another climactic stock. This is not as climactic or as bearish as some of the other ones, but it does have a breakout bar that if we take out the low of that breakout bar, it should basically turn out to be a breakout failure. And every breakout failure is bearish. Breakout failures are just bearish. So my suggestion would be under 50.50 by 57.50. Okay, SSYS, the 3D printing stocks, caught fire, of course, and broke out on the monthly. But will they come down to earth a little bit? Sure. I like it short under the red bar, stop over the all-time high, or over the green bar's high. I don't know what it is. It's 46.50. TRIT, the weirdest chart I've ever seen. It's not GameStop. It's not any of these vaccine stock. It's TRIT. Crazy stuff. Look at this. Gaps down from like 15 bucks, right? 14 to 8. Goes back up to 15. Sells off. I mean, it's just so weird. But it's really, really bearish, because we negated that rally. And now it's basing, not quite basing, but we have a 1, 2, 3. So short under this bar, stop above it, under 690 by 754. And Tesla already triggered. I had a call on it on Friday. I have it also as a swing. There it is. I already have it. So it's already triggered. Oops, I didn't mean to go there. Let's go back to the charts. And weekly looks pretty bearish. Big red bar. So under it, we should continue lower if we take it out, under 780 by 900. But you can't wait on Tesla, because if you wait, then the stop becomes, as you can see, 128 bucks. So it becomes too big. So I already played it based on the hourly chart. So you see the sell setup, so that's what I did. Short right here on Tesla, stop right here. That's a much different play than entering short right here, stop up here. I'm not saying there's anything wrong with this setup on the weekly chart, except for the size of the stop. When the stop is big, you're not going to be able to have the share size. You're going to have very small share size, which means even if it drops, you're not going to be able to have, you're not going to make much money. By the way, this has been a phenomenal month. It's actually my third best month ever. January, as you can see, 271, and we had 2 holiday days in January, so it was only 21 day trading days. That's, so we had 2 days off, and still this was a phenomenal month for me. 271,000, and phenomenal month for also room members. So I hope you're enjoying it. Hope you're doing great. If you want to trade with me for a full week, you can actually trade with me live for a full week at the end of February. The last week of February, I'm doing a live trading and training session every day for 5 days in a row, including a session on Sunday, a 4-hour, 5-hour session on Sunday. So the day before the start of mentorship, the last week of February. If you'd like to learn more about it, link for that is in the description. But with that said, I hope you enjoyed today's video, and I hope you're doing great. I will talk to you sometime soon. Thank you so much, and take care, everybody.